Today we're going to talk about commercial mortgage financing for retail buildings such as plazas, strip malls, maybe big box stores like Home Depot. Key lending criteria for commercial lending is, for starters, they want to look at cash flow. They want to look at the location of a property, the location of the real estate. And what that's about is really, if they're going to fund a commercial property, a retail plaza for instance, they're very interested in is it a good location for retail? If you have existing tenants, if you lose a tenant, are they easy to replace? But, I guess more to the present is, what does your rent roll look like? Who are your tenants? Are they doing well? Does it look like it's a good retail area? Are they expected to stay? That's very important in a commercial lending type application. And they also look right now, what are your existing vacancies? That's something else that's very much a criteria. When we talk about lending categories, we talk about the A lenders, which would include banks, life insurance companies, credit unions, financial institutions. Now, usually they like doing the bigger deals. They'll do smaller ones, but they like to do the bigger deals. They're willing to give a very good rate, but the criteria is stringent. They're very conservative. They may not go, the 70% loan to value, against what the property's worth. They like to keep it lower, 65%, for instance. They're a little tougher. They're looking for better product, but they will give a very low rate. The next category would be a B category, let's call it, and that is where you have investment companies, investment banks, maybe hedge funds. Now they will, charge a bit of a higher rate, but they will do things such as maybe extend the loan to value. There are things like amortization, where an A lender may, determine that, a 15 or a 20-year amortization is the highest that it would go. A B lender might say, yes, I'm prepared to give a 25-year amortization. And cash flow is very important when it comes to commercial lending. The third category would be, let's say, a C category, which is private lending. So now private lending includes just private individuals, but it also includes things like mortgage investment corporations, larger kind of funds. Private people, there's probably a limit as to how much they can do on one mortgage. And you're looking for something $5–10 million, we can go to one of these private type funds. Now their rate's a bit higher. Criteria again is less conservative, but you can make a deal probably quicker, and you know what you've got, and they'll do a deal where maybe you couldn't get it done at an A or a B lender. The application process for retail lending or lending on retail plazas, for instance, would be, first of all, an application on who the borrower is, providing copies of all the leases, copy of the income and expenses, copy of a rent roll. We would require an appraisal, usually by an accredited appraiser, and mostly a commercial type appraiser, somebody that does these all the time. Usually there's where you have a lot of appraisers that just do residential, and then there will be a smaller number that do commercial. Environmental audits, especially for the larger mortgages, are required. Sometimes for the small, let's say if it's a store with a couple of apartments above or something, we can get away without an environmental audit. But for the larger mortgages on straight retail lending, an audit for environmental purposes are almost always required. So the timelines for a completion of a commercial application on stores, plazas, things like that, usually it's about 30 or 60 days. Although it's a bit sophisticated, they're not that complex. You've got the leases in place. A lot of times the leases are sort of net leases. A tenant will pay rent every month, but then the tenant pays all his own expenses, so there's not as much breakdown in terms of expenses. So the timeline's 30 to 60 days. It can go over or close to 60 days sometimes, because we're also relying on third-party documentation, for instance. We may have an accountant that is still working on financial statements. We don't have full up-to-date statements. We need an appraisal done. Sometimes that takes time. So we're relying on other people. So let's say, for instance, me as a mortgage broker, I do my job and I work hard at it, and the lender does their job, and the borrower, the person that needs the money, works hard to get things together, but we're relying on third parties. So sometimes it can take a bit longer. So the best approach for arranging commercial financing for retail buildings would be to have somebody look after it that is experienced. An experienced broker that does a fair bit of commercial financing. Advantages are, and this is large, is that if you have somebody that knows who's lending right now in the arena of commercial financing, you may go to different banks and they basically have it up there on the list. Yes, we do this. Yes, we do commercial lending. Yes, we'll lend on plazas. But things change, from month to month or from year to year. And maybe at the beginning of a year, a lender may be very aggressive trying to put out a lot of money on retail buildings. But once they reach a certain point, then they kind of turn the valve down. They say, okay, we've done enough of that. Let's focus more on residential. So a borrower wouldn't necessarily know those types of things. So somebody that's doing a lot of commercial financing, we're sort of on top of that. So I know who's kind of looking for what. I wouldn't go to one particular lender with a deal on a plaza maybe that's in Northern Ontario, or I may not do I may not do a bowling alley with a major bank. There's different niches that you kind of get to know as a commercial broker. If you need more information, give me a call, 416-464-4113, or send me an email. I look forward to speaking with you. Take care.